back to our course on mandatory climate reporting under the Australian Sustainability Reporting Standards. I'm Barbara Albert, co-CEO of 100% Renewables. In this video, we're taking a closer look at how you can develop carbon footprints that are compliant with the mandatory climate reporting standards. Before we dive in, if you are unsure about the 3 scopes in carbon accounting, please watch our explainer video. We've put a link in the description. Now, let's have a look at the detailed requirements. If your business is making disclosures under ASRS, you must report your Scope 1 emissions aligned with the Australian ENGA standards, your Scope 2 emissions, and your material Scope 3 emissions covering your entire value chain. There's a couple of specific requirements that are worthwhile discussing. Firstly, you may wonder what exactly constitutes material Scope 3 emissions. Materiality is judged based on whether omitting, misstating, or obscuring information could influence the decisions of primary users of your climate-related disclosures. Secondly, under Scope 2, you should know that initially you will need to report your location-based emissions. After a grace period of 3 years, you'll also need to report your market-based electricity-related emissions. If you would like to find out more about the differences between the 2 approaches, please watch our explainer video. We've put the link to the video in the description below. Now back to Scope 3 emissions, which reflect the interconnectedness of transition risks within your value chain. They represent a significant portion of most organizations' carbon footprint. Initially, you may rely on estimating your Scope 3 emissions because of the inherent challenges in obtaining detailed information across the value chain. However, over time, as you enhance your internal capabilities and methodologies, these disclosures are expected to become more accurate. What we have noticed is that some large emitting organizations are starting to collaborate more closely with the value chain to obtain carbon footprint information directly from the suppliers. If you're interested in learning more about this collaborative approach, please watch video 8 in this series. The link is in the description. Here are some key considerations for Scope 3 emissions. First up, the good news. You have an additional year to report Scope 3 emissions, acknowledging the complexity of these calculations. When you calculate your Scope 3 emissions, you need to align with the 15 categories of the Greenhouse Gas Protocol value chain standard. In terms of emissions factors, you need to use the National Greenhouse Accounts factors whenever this is possible. Where you can't, you can draw on other Australian sources before applying international factors. In terms of data quality, aim for the highest quality possible and prioritize primary data from value chain activities. Primary data is data obtained directly from specific activities within your value chain, such as supplier-specific emissions factors for purchased goods and services, or distance travelled and travel class used by employees when travelling. Where possible, prioritize verified data to enhance the credibility of your reporting. Note that data can be internally verified, such as by reviewing calculations, or externally verified via assurance providers. So how can you develop an ASRS-compliant carbon footprint? Begin by clearly defining the scope of your emissions, categorizing them into Scope 1, Scope 2, and 3. Align your measurement approach with the ENGA legislation for Scopes 1 and 2. To estimate Scope 3 greenhouse gas emissions, you can use ENGA, for instance, to calculate emissions from your contractor's fuel consumption and other methods from the Greenhouse Gas Protocol. Collect data across all relevant categories, understanding that while primary data is ideal, secondary data may be necessary for comprehensive Scope 3 assessments. Be transparent about your assumptions and the basis of your calculations, working towards refining these estimates over time. Improve your data collection processes to capture detailed, activity-specific information. And finally, seek to verify your data wherever possible, which will make your disclosures more reliable. I hope you found this video useful. Remember that if you need help with developing your carbon footprint, we're here to help. At 100% Renewables, developing carbon footprints is part and parcel of what we do. Next up in this series, we'll look at disclosing your climate risks and opportunities. Please note that this video is also part of our complimentary course on ASRS. We have put the link to the course in the description below.